Today on the Blockchain Report, Bitcoin's blasting past 93K because gravity is so last cycle. Hackers are hijacking Zoom calls, and no, it's not to discuss Q1 deliverables. And Scottie Pippen, he's dropping dimes and Bitcoin calls like he never left the Bulls. All this and more on today's show. Let's go! Good morning and happy Wednesday, my digital playboys and playgirls, and welcome back to another aggressively caffeinated episode of the Blockchain Report. I'm your host, Hank Hudson, broadcasting live from San Francisco, where tech optimism is high, and my Uber driver last night pitched me an altcoin tied to emotional clarity, of which I still have none. I'm just a wreck these days. Before we cannonball into today's crypto circus, go ahead and smash that like button like Gallagher smashes a watermelon. Think I really dated myself with that one. Either way, follow RoxomTV and gently internet stalk me at Hank@RoxomTV on TikTok, YouTube, Insta, and X, the only app where billionaires and bots argue over inflation like it's a Marvel reboot. Because let's be real here, your algorithm already knows what you're gonna eat for dinner, who you used to date, and how much Doge you're secretly still holding on to. So you might as well feed it something fun, punchy, and mildly addictive, like crypto, but without the existential dread. Now pour yourself a cold brew, a mushroom elixir, or whatever potion keeps you from screaming into a pillow at work, because today's headlines are spicier than that AI-generated romance novel featuring Vitalik Buterin and Mudang. But before we get started with the big news of the day, let's check the damage in this morning's Market Rundown. All right, and we're here and bringing news of good tidings this morning. It's been a nice change of pace the last 2 days. Let's see how things are looking. Bitcoin hovering just beneath 93K. Are we seeing the next big run on the horizon? We'll get back to that with Luca Pagano, our crypto wunderkind, in just a few minutes. He'll be explaining to us the charts and what he's seeing in the tea leaves. Ethereum hovering just below 1,800 a coin. XRP is up 1%. Cardano is up nearly 3%. And Dogecoin sitting just beneath 18 cents a coin. Things are looking pretty good in the cryptoverse this morning. Let's see how the TradFi stonk market is doing. Let's take a peek. We have the Dow Jones is up 2.5%. The Nasdaq's up nearly 4%, and the S&P 500 is up nearly 3% this morning. Things are looking good. MicroStrategy's up about 0.5 percentage point, hovering at around 344. We have Nvidia up nearly 5% this morning. Tesla's up nearly 8%, and GameStop is around just 27.5 for the day. Things are looking good. Let's get started with this morning's market or bull run right after this break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back to this morning's bull run, where we go over the top stories of the morning. Well, we're getting started here. You better hold on to your digital wallets because Bitcoin is riding a rocket right now, soaring past 93,000, up as high as 94.5 for the first time since early March. And you read that right. We're talking 93, 94K here. That's the highest it's been in nearly 6 weeks. And what's driving this sudden rally, you ask? Well, it's not just another run-of-the-mill Bitcoin price pump. Nuh-uh. This time, we've got President Trump and U.S.-China trade tensions are doing some of the heavy lifting here. Earlier this week, Trump decided to soften his stance on the tariff situation with China. He announced that the U.S. tariffs on China are going to come down substantially, essentially tossing a big old bone to the market. Part of the deal. Meanwhile, Treasury Secretary Scott Bessent chimed in with a little "we can't keep doing this tariff tango forever" at a closed-door investor summit. And just like that, the market's calmed down and Bitcoin is back on the rise. Now, BTC, it tends to like this kind of chaos. That's according to our Lord and Saylor, Michael Saylor. Take a look at what he had to say on the David Lynn report. Let's take a peek. Yeah, we're having some audio issues here. You know, it's a morning show and it's live. But
so Bitcoin
Michael,
is powered by chaos because chaos will never go away. It's always going to devalue all of the traditional physical and financial capital assets. And it's going to be the driver that causes all the smart money in the world to run, to sell their physical and financial assets and to buy a digital asset. And so really, as the world gets educated and as regulators create on-ramps, right? When your bank handles Bitcoin, when a big tech company can wire $1 billion to the bank every week and buy Bitcoin, they'll just be wiring $1 billion and swapping it out because it's easy and it's rational. So that's really what you're looking at, and that's why I think it's just a very elegant and beautiful asset.
Words from our good friend Michael Saylor. Now, the entire crypto space is dancing with Bitcoin. Ethereum's up nearly 8%. Dogecoin and Sui are hitting double-digit gains, and the CoinDesk's 20 index is enjoying a solid 5.2% gain. And I mean, why not? With the U.S. stock market still wading through a bit of mire and gold doing its I'm a safe haven routine, Bitcoin is feeling pretty good about itself right now. But let's not get too comfortable just yet, as despite this impressive surge, there's still some resistance around the 91-92 range. It's like Bitcoin is trying to muscle through a door, but someone keeps locking it anyway. But hey, don't let that stop the party. 93,000 is the party invite that tells everyone the price is ready to break free. And speaking of breaking free, Bitcoin seems to be decoupling from stocks in a very big way, which according to Dennis Porter of the Satoshi Action Fund is a massively bullish sign. You see what I'm doing right here? You see this? This is me waving goodbye to stock market correlation, because Bitcoin's now looking like a grown-up asset that doesn't need to hang out with tech stocks to get attention. Oh, and if you're worried about, demand weakening, don't panic. I mean, it's happening, but hey, it's not the end of the world yet. The $350 billion that entered crypto markets recently is mostly going into Bitcoin, which leaves all of those altcoins looking a little sad. Ethereum struggling to stay above 1600 until late, as now it's hitting around that 1800 mark, while Solana and Binance Coin are backpedaling faster than a Bitcoin dip. So alt season, well, it's more like alt pause for now. Still, Bitcoin's dominance is hitting a 4-year high at nearly 65%. And if you're in the mood for a long-term price forecast, look no further than Robert Kiyosaki, who's still banking on Bitcoin to hit 180,000 this year with a $1 million target by 2035. But here's where the story takes an interesting twist. This rally may not last forever. According to Crypto Quant, Bitcoin is in a bit of a fragile state. There's weak liquidity, and despite BTC's recent climb, demand from new investors isn't exactly setting the world on fire. In fact, 146,000 BTC has disappeared from the market in just the past 30 days, leaving a hole in what was once a nice warm pool of new market entrants. And while the ETFs are seeing nice inflows themselves, like a $381 million net inflow to Bitcoin ETFs, it's still a little unclear if that's enough to push Bitcoin past this resistance zone. But hey, we're at 93,000 right now, so who's complaining? Now, will it last? Who knows? But if Bitcoin keeps doing its thing and Trump keeps playing nice with China, we could be in for a wild ride ahead. For now, though, let's just sit back and enjoy the view from this 93K high, because let's be honest, we've earned this. And speaking of wild rides, the Bitcoin conference is coming up in Las Vegas from May 27th through May 29th. And yes, I'll be there, mingling awkwardly and pretending to know what I'm doing. Use the Roxom code for 10% off of your ticket. Now, joining us in the studio is one of my best buddies, our crypto wunderkind and resident chart shark, Luca Pagano, who's going to help us make sense of everything that's going on. Luca, how are you this morning? Holler if you hear me. We got to get you some good sound to go with that graphic. How are you, buddy?
Hey, dear Hank, how's everything going? Beautiful day in the market, man.
It is about darn time too. I mean, what's going on out there, Luca? What are you seeing? Obviously, this back and forth with Trump tariffs is playing a big part of this. Bitcoin finally breaks past 93K. What are you seeing in the charts this morning?
Yeah, I mean, honestly, when we look back, Hank, to the last weeks, we've been analyzing this. I mean, we this is beautiful. You know, the market has been very, very nice to us in terms of giving us the pullback we expected. Remember, we marked up the Fibonacci for the folks just joining. Like we said, hey, this was the big push. You know, we had at the end of last year. We had this big distribution, you know, and then we hit very, you know, if I take these lines for a minute, we've been very, very honestly specific in terms of levels, very accurate. So I think that is awesome. We had this big, pull down, and what I see here is a great recovery, honestly, onto distribution. Remember, we last week, Hank, we expected a push. We had to be careful, and we still have to be careful. This is very important for the 90s to $93,000, like the low 90s, because this was remember last support in terms of the distribution we had here. So as I always love to say, Hank, what was before support now becomes resistance, and I think that is important thing to consider coming up in the following hours, you know?
Yeah, absolutely. So 93,000 kind of seems to be this new level of resistance based on what we're seeing. I think Bitcoin even reached as high as 94.5 briefly yesterday until coming back down. What are the levels that we need to be watching in the upcoming days and weeks here? Are we primed for a new breakout, or should we be treading carefully in these uncertain waters?
Yeah, so in terms of levels, you know, I think what is very important for us to see is we had this push, which was the breakout we were expecting from the 85s, you know. So this becomes our new dear support that we need to honestly let's do this together here. We definitely need to cover and hold, you know, the 84 to $85,000 zone, right? And resistance, we have this 93 to $94,000, basically the gray area, which was definitely the support. Remember, when we were in distribution, we held here, so many times supported. So high volume node level, that's what we always want to see. We want to see high volume areas, so that's where probably participants will be taking their guess, you know, in terms of higher or lower. So what I'd like to see here, Hank, is for me, this is a no activity area. I mean, this is not where you want to buy. This is my opinion, of course. You want to either buy in a reclaim of this area. If we trade above $95,000, for me, we should be, if we can hold this area, we should be going to new highs, honestly. If not, what I want to see is a gentle pullback into our $94,000-$95,000 to see us go higher. You know, that's our bullish now structure that has been made for the last 2 days, you know.
Yeah. One thing I found really interesting about the last week or so, Luca, is that it seems like Bitcoin has, I don't want to say the big D word, but it seems to have decoupled a little bit from the traditional markets in a way that we've kind of been waiting for. We saw a big dip in the Nasdaq, the Dow Jones, the S&P, and while Bitcoin went down as well, it went down about a fraction, like a half to a third of some of the traditional markets. Do you think, is Bitcoin having its moment, or right now where it's finally starting to break free from these patterns we've seen previously, or is it maybe something else in the water?
Well, I think that is an awesome point, and we shall see that in the charts, Hank, because I think it is very clear. I'm pulling up here. I don't know if you guys can see me. We have basically the chart that in blue it's the Nasdaq, right, and in pink we have the Bitcoin price, right. So
yeah,
since the last correction, this was basically more or less end of February was the top, let's say, or the local top. Okay, so since the big correction, we see Nasdaq again in blue being basically as aggressive or even more aggressive in some days than BTC, which is honestly a surprise to see because the historic volatility in BTC is greater than the one of Nasdaq. But as well, see how the recovery has decoupled. This is honestly amazing. Nasdaq is still from the top about 14% down, while BTC is almost 3.5%. So I think that is very important to in terms of relative strength. This is marking basically relative strength. I mean, it doesn't mean Bitcoin cannot fall. It doesn't mean Nasdaq cannot go up, but this definitely is marking from the bottom a good relative strength in terms of Bitcoin against equities.
And another thing I found really interesting is right now, Bitcoin's dominance is around 65%. Do you think that speaks to, in combination with this seeming bit of decoupling, that people are really starting to view Bitcoin as the safe haven asset that we've always expected it to be? Because it seems to be dominating all the altcoins right now, in addition to decoupling. Is that maybe a signal of what's to come and people are really starting to view Bitcoin as the digital gold that we're all expecting it to be?
I mean, in terms of the Bitcoin here, I'm marking very quick for you guys the Bitcoin dominance chart. So honestly, since last cycle, since the bull cycle has become, this has been nonstop, man. So we're now almost at we're at 64% of Bitcoin dominance in terms of relative to the market of altcoins. So it's not relative strength only to equities, it's relative strength to the altcoin market. And honestly, you love to see that if you're looking for all-time highs, because as we love to say here, Hank, a great bull cycle in terms of crypto. I know people love the altcoins, but a great bull cycle comes with Bitcoin very, very, very strong, so that we can distribute some gains on that into smaller products. All right. Yeah.
Okay, so I know you got to go in here in a second. Before you do, it's April 23rd right now. What are you looking at for Bitcoin price predictions? Again, this is not financial advice for the end of this month. We got a week to go. What are you thinking we should be looking out for?
Yeah. So we got a week to go. For me, we should keep honestly this week. These days very, 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 very entertaining. So we should urge some high volatility. What I would love to see, honestly, is very quick retrace, maybe a week. We love those weeks. For example, some like we had, starting March. So quick week, I would love, honestly, and if we can regain our $95,000 and we can close up there, I'm honestly looking to finish above $100,000.
All right, so if we hit above 95, we could see enough momentum to bring us past the triple digits, or I guess it'd be 6 digits.
And for me, that's an all-time high soon, man.
Say that again?
For me, that's an all-time high.
All-time high soon. Okay, all right. Well, we'll remain optimistic, but we know the market is a fickle beast, especially with Don Juan calling the shots out there. But as always, Luca, we certainly appreciate having you on the show, and we can't wait to see you very soon, my friend. Thanks for joining us this morning.
Bye-bye, Hank. It's always a pleasure to be here. Thank you very much.
Pleasure's mine. Welcome back to the Bull Run. Well, gang, it looks like the SEC is getting a makeover. And no, it's not a new logo. It's a new chairman. We're talking Paul Adkins, the man who's probably spent more time around Wall Street than the average person spends checking their crypto portfolio. He's just been sworn in to replace Gary Gensler, the former SEC chair who was basically the industry's crypto kryptonite. Now, Gensler's reign was a little like trying to get through a red light while driving a tank. The guy wasn't here for crypto, let's call it like it was. Meanwhile, Adkins, well, he's already got crypto people calling him their bestie. Why? Because Adkins is a guy who knows digital assets and isn't just here to crush the fun with regulatory certainty like Gensler. No, Adkins is more like, let's make sure we don't break anything while still getting this Bitcoin party started. Here's the kicker. The Senate confirmed him with a 52-44 vote, and yes, it was a party line vote. This is Washington after all. But hey, who cares about politics when there's crypto clarity on the horizon, right? Now, Trump, he threw his weight around behind Adkins, saying he's the perfect man for the job because nothing says I get crypto like backing someone who once worked in financial services and has rubbed elbows with the digital asset crowd. Adkins is the guy you call when you need the SEC to chill out, but still, follow the rules. Now, what does this mean for crypto going forward exactly? Well, we're hoping it means less time looking over our shoulders like we're playing hide and seek with the IRS, and more time doing what we do best, making money and wondering why we didn't get into Bitcoin back in 2010. But of course, some critics are out there with their "but what about 2008" rants, because apparently it's never a good time to let the guy from the financial crisis have a second shot. Now, critics say Adkins' time at the SEC before was controversial. But hey, that was like 17 years ago, guys. And this is crypto. If you're still holding on to old grudges from 2008, you probably still haven't learned how to set up a stop loss. In any case, the good news is that Adkins isn't here to hand out subpoenas for every Bitcoin tweet that mentions a meme coin. He's aiming to give crypto the clarity it so desperately needs while making sure no one's taking the money and running with it. Now, let's see how he handles the rest of the SEC's crypto agenda, which, let's be honest, has been like the world's slowest reality show. Will he get it right, or is this just another episode of Will the SEC Let Crypto Breathe? All we know for sure is that things are about to get very, very interesting. And California, well, we're back at it again, the state that brought you Silicon Valley, the Golden Gate Bridge, and now self-custody crypto rights. California Assembly Bill 1052, also known as the Digital Assets Bill, has officially passed a committee vote with bipartisan support. And yeah, you heard that right, bipartisan support in California. On April 21st of 2025, after being introduced by Assembly member Avelino Valencia in February and tweaked it this March, this bill took one step closer to making self-custody a protected right in the Golden State. Now, the bill's main goal is to protect crypto users and investors, giving them the legal right to self-custody their digital assets without the government poking around in their wallets. AB 1052 gives individuals and businesses the green light to accept digital assets as payment and says that totally legal in private transactions. That sentence sounded weird to me. Now, because who doesn't love a little self-sovereignty with their morning coffee, right? But here's the kicker. The bill also prohibits public entities from trying to restrict digital assets, using them, or imposing special taxes on crypto payments. Or in short, California is saying, hey, no one's going to tell you what you can do with your Bitcoin, and they're putting that in legal writing. It also puts the government in its place, specifically preventing them from regulating self-custody solutions. Now that means you get to hold your private keys without any bureaucratic interference. Now, before you start thinking California is about to become the crypto capital of the world, let's be real here. This has a long way to go. Now, the bill needs to pass the full assembly floor, then the Senate, and then Governor Gavin Newsom needs to give it the final A or nay. We're talking about a 2/3 vote and some technical amendments before this gets fully signed into law. And while you're waiting for the bureaucracy to work its magic, let's talk about another strategic Bitcoin reserve move. Meanwhile, over in Arizona, the state is in its final stages of voting on 2 Bitcoin reserve bills. 46 states have introduced Bitcoin reserve bills so far, with New Hampshire and Texas likely to follow Arizona's lead. Now, Bitcoin's hitting 6-week highs at around 93, 94K. And let me tell you, with all of this financial uncertainty happening in the US, Bitcoin is looking more and more like a safe haven asset. So, whether you're in California or Arizona or somewhere in between, Bitcoin is becoming harder and harder to ignore. And who knows, maybe California will be the one to set the stage for a digital gold rush. But for now, just sit tight and grab your popcorn. This bill still has a few more hurdles to clear before you can start self-custodying your crypto like a free agent. Now, Scottie Pippen, NBA legend and former sidekick to Michael Jordan, is now giving us financial advice. Okay, because why not, right? He's got 724,000 followers on X, and now he's asking them to study Bitcoin. Now, let's pause and just digest this one for a second here, because Pippen's tweet was literally just 2 words, study Bitcoin, which feels like either an attempt to change the financial future or a really weak Instagram caption for a late-night deep dive into cryptocurrency. Either way, Pippen's taking his talents from the hardwood to the blockchain, and his followers seem both intrigued and kind of sarcastic about it. Some are probably wondering if he meant study, as in study the market long enough to realize it's a wild roller coaster with absolutely no seatbelts. But this isn't just about a tweet. Pippen's making predictions. Last week, he tweeted that he expected the biggest altcoin bull run to begin on April 20th. His logic? Well, it's apparently based on some super compelling math. 340 days after the Bitcoin halving. You know, the thing where the Bitcoin block reward gets cut in half and every trader thinks it's time to either buy the dip or buy their third Lambo. So, according to Pippen, this time altcoins are going to see a 175x price surge. And just in case you're wondering how much we should trust an ex-NBA player's price prediction, Pippen dropped a historical chart showing that altcoins rallied in 2017 and 2021 after Bitcoin's halving. Can we bring that chart up here real quick? It's official stuff. Scottie Pippen tweeted it. Now, because sure, historical price charts never get it wrong. Let's look at this one here for a sec. It looks like altcoins go uppy during Bitcoin halving. I mean, just ask anyone who bought Dogecoin in 2018. Now, this prediction is about as grounded as the idea of winning a game of Monopoly in one sitting. But hey, Pippen's living on the edge, and why shouldn't we all join him in his altcoin FOMO? Let's just hope he's not talking about Bitcoin to 180K next. That's Robert Kiyosaki's move. We're saving that whole thing for another segment on Pippen, but we'll wait to give you that one. XRP, on the other hand, is having its moment, it seems, again. Earlier this week, the token jumped 4% to 213. Now it's sitting around 220. I mean, it's not exactly a moonshot, but enough for the XRP army to briefly cancel their weekly lawsuit conspiracy thread and fire off fresh price predictions. And what's fueling this latest spike, might you ask? Well, apparently it's Latin America and Donald Trump. According to a new report from Mexico-based exchange Bitso, XRP made up 12% of the average crypto portfolio across Central and South America in 2024. Ranking it just behind Bitcoin and Ethereum. And if you're thinking, wait a second, didn't XRP spend half the last decade fighting the SEC? Yeah, you're right, it did. But apparently, a region hit hard by inflation, remittance fees, and economic volatility said, that's fine, we'll take it. Bitso says that 9% of all crypto buys in Latin America last year were XRP, putting it just behind USDC, Bitcoin, and Tether. Which honestly is like coming in fourth at the Olympics behind Usain Bolt, Tesla, and caffeine. Not the worst company. Bitso's analysts cite one key turning point, Trump's return to the White House. Because apparently political upset in the US translates to optimism in Latin America, especially for tokens that had been on the regulatory naughty list, like Sol and especially XRP. And it gets even juicier. Ripple and the SEC have filed to suspend their appeals, which could signal an end to legal wars that have been holding XRP back like a college roommate who still thinks Dogecoin is a realistic retirement plan. It's not. That means Ripple could finally go full throttle on expanding its global remittance empire, which is kind of the whole point of XRP, really. At least if, you ignore the fan theories and $589 memes. Now, does this mean that XRP is going to $10 anytime soon? Short answer, no. Long answer, still no, but let's pretend here for a second. To be fair, XRP is up over 300% in the past 12 months, and its one-day chart shows rising momentum with the RSI popping back to 50 and the price edging toward its 30-day moving average. If momentum holds, we could see $250 by the end of May, maybe $3 in the second half of the year if an XRP ETF somehow gets approved, and the SEC forgets who Ripple is, of course. But $10, that would require either every bank on earth suddenly starts adopting XRP, Tether imploding in a fiery ball of unbacked loans, or the Federal Reserve replacing the dollar with XRP Classic. So while it's nice to dream, let's not mortgage the dog for it. Also, because no XRP story is complete without an unrelated hype train, the final third of this report throws in a completely unrelated plug for Mind of Pepe, an ERC20 meme token that uses AI to create other meme tokens. It's like ChatGPT and Pepe had a baby and then tried to list it on Binance. Apparently, holders of Mind get access to these auto-generated meme coins before they launch, plus AI-generated market advice. Because nothing says sound investment strategy like a token named after a cartoon frog feeding you alpha. Anyway, XRP is still in the game, but if you're expecting $10, maybe don't. All right, well, I want to talk about Trump media next because it's going very crypto, and who saw this coming, right? We all did. They've been talking about it for a while now, but it's official. Trump's company is now launching crypto ETFs and a whole bunch of retail investment products. It's like Trump NFTs, but bigger. Do you remember these things? I can't get over them. They're ridiculous. What is that, like Trump in a lab coat? Trump is a space cadet. I didn't see him on that Origin flight. And then Trump at a full moon. Jesus, Mary and Joseph. I mean, this is the same guy who once dissed Bitcoin as not money and highly volatile, but now he's just all about it. Well, guess what? Now he's going full throttle, trying to make even more crypto cash for himself. Trump Media, in partnership with Crypto.com, plans to launch several crypto-focused ETFs, along some America First investment products, whatever that means. I mean, is anyone else excited to see Trump's face on an ETF? Maybe he'll own his own special edition with extra MAGA-powered returns. Can't wait. Because apparently, Trump is looking to make digital assets as American as apple pie, with the side of stock market volatility, of course. And you know what's truly wild about all this? Trump's already knee-deep in crypto. I mean, he's already launched those infamous Trump NFTs I just showed you, Trump Coin, and even has a stake in a Bitcoin mining company. Now he wants to roll out ETFs that are sure to be perfectly aligned with America's greatness. If there's ever a need for some regulatory cleanup, it'll be because we're all buying crypto in MAGA mugs in the same transaction. But hey, if you're a fan of the Trump brand, this is your moment. It seems kind of like the whole country's about to be roped into Trump's crypto revolution, or at the very least, get some discounted ETFs with a wink and a smile. The only question is, will the crypto world have room for another America First coin? I don't think so. And in other news, it looks like Zoom's remote control feature isn't just for giving someone a virtual high five in a meeting anymore. Apparently, it's now the hacker's dream tool for stealing crypto. A hacker group called Elusive Comet is targeting cryptocurrency users with a social engineering attack that exploits Zoom's remote control feature. Great. Now, for those of you who are still zooming around like it's 2020, let me just break this down for you, okay? The remote control feature on Zoom lets one participant take control of another's computer. Now, normally this is for tech support or some other legitimate reason, but these hackers are using it to play the long con. According to Trail of Bits, a cybersecurity firm, these attackers aren't using some complex coding exploit. They're manipulating legitimate workflows, just like hackers behind the $1.5 billion Bybit crypto heist. Nice. So how does this work exactly? Well, it starts with a Bloomberg crypto interview invitation via Zoom. But here's the kicker. The invitations come from fake Bloomberg journalists or sock puppet accounts on X. But I mean, come on, who doesn't want a random invitation to discuss crypto with Bloomberg? And the invites come via Calendly links, which is about as legit as it gets as far as scheduling tools go. I mean, everything looks normal, right? Well, it gets better or worse, depending on how you look at it. During the Zoom call, the attacker initiates a screen sharing session and sends a remote control request. Now, the trick here is that they renamed their Zoom display to Zoom. So when you see Zoom is requesting remote control of your screen, you're supposed to trust it, right? You think it's Zoom. The problem is you've just approved a hacker to control your computer. Whoops. Now the hacker has full access to your system, which means they can steal sensitive data, install malware, or even initiate crypto transactions. And just to make it a little worse, these guys aren't playing a short game. They implant a backdoor for later use, which means you'll have no idea they're still there until it's way too late. Now, what makes this particularly dangerous is how similar the Zoom prompts are to regular harmless ones. Approve just becomes a reflex after a while, right? I mean, Trail of Bits is like, hey, maybe stop approving random screen control requests, okay? I mean, their advice is start using privacy preferences policy control, or PPPC, profiles, or if you're dealing with sensitive crypto transactions, just remove Zoom entirely. I mean, sure, it might be a minor inconvenience, but having your crypto stolen because you trusted a stranger with a remote control request, that's what I call a major inconvenience. Now, Trail of Bits also says organizations handling digital assets should probably be Zoom-free for security in critical environments. I mean, just imagine you thought you were scheduling an interview with Bloomberg, but instead you're just handing over the keys to your crypto kingdom. So, pro tip, next time a Zoom meeting props up with a stranger, double check who's asking for your controls. You never know if it's a elusive comet trying to make your day a whole lot worse. Pack your bags, you degenerates. Bitcoin is coming to Las Vegas. That's right, the Bitcoin conference is taking over the Venetian Hotel, May 27th through May 29th. It's basically Coachella for crypto bros, but with fewer flower crowns and more cold storage wallets. The biggest names in Bitcoin will be there. Will I? Maybe. Or maybe I'll stay home and live tweet it in my gold jacket. Either way, you should definitely go. And when you do, don't pay full price like a fiat clown. Use promo code ROXOM for 10% off your ticket. That's Roxom, R-O-X-O-M, like RoxomTV, the network brave enough to mix market news with memes and call it journalism. Now get on it and book your ticket today, and I'll see you there. Or will I? All right, now it's time for Blockchain Without Borders, and let's see what's going on in Korea. The good one, in the South. Because their rich are stacking sats like it's a national sport. According to a new report from Hana Bank, over 30% of wealthy Koreans now prefer crypto as their long-term wealth strategy. That's more than those betting on gold, real estate, or even the almighty Kospi Index. And if you're wondering how much they're putting in, well, we're not talking pocket change exactly. More than 70% of these investors are dropping over $7,000 into crypto, and in most cases, it's double what the average retail trader is doing. Meanwhile, the Korean stock market, it's getting a little ghosted here. Young Koreans are fleeing domestic equities like it's a bad Tinder match, and investors in their 20s now make up only 11% of Korean stock market, down from nearly 15% only 2 years ago. And the 30-somethings, well, they aren't far behind. They're dipping from 21% to 19%. Now, where are they going instead, you ask? Well, straight into the warm, volatile arms of crypto and friends. Nearly half of all crypto investors in South Korea are in their 20s and 30s, and it's not a fringe movement either. On just 5 Korean exchanges, Upbit, BitThumb, CoinOne, Corebit, and GoPax, the total trading volume last year hit 1.76 trillion. Now, CryptoQuant CEO says it's all driven by Korean retail traders who have a much higher appetite for risk than Americans. Honestly, it's not really that surprising in a country where spicy noodles are a competitive sport. And when it comes to altcoin trading, Korea is basically on the global leaderboard right now, as Hana's not telling people to exactly YOLO into dog coins either, but they're waving a polite flag to legacy finance, that this isn't a phase. Even the Financial Services Commission is stepping in. They're drafting new crypto investment guidelines, planning to roll out standards for trading and disclosure, and maybe even, dare we say it, ETFs. At a recent policy meeting, one official said Korea is now moving faster to foster its crypto market, citing Trump's push to make the US a Bitcoin superpower as part of the global momentum. And yes, politicians are noticing. Presidential hopeful Hong Jun-pyo says he wants to roll back regulations, drawing a direct comparison to Trump's deregulatory stance here in the US. So whether or not you agree with the politics, the shift is certainly undeniable. Crypto now touches roughly 30% of the Korean population, and that's not a blip either, that's a cultural shift. The report ends on a cautious note, however, saying institutional safety nets are lacking and public understanding of blockchain remains a little spotty. But the wealthy, they're reading up, doing their homework, and allocating themselves accordingly. Because when legacy institutions start echoing the Bitcoin thesis, maybe, just maybe, we're not the crazy ones. And attention Mexico, bull Bitcoin just showed up with tacos in one hand and a self-custody wallet in the other. The Canada-based non-custodial Bitcoin platform has officially launched operations south of the border, and it's not just targeting citizens. Residents, tourists, and anyone with a Lightning wallet and a dream can now send Bitcoin directly to a Mexican bank account in real time. No altcoins, no middlemen, no oops, we rehypothecated your funds into a Solana meme token nonsense. Bull Bitcoin is now live in Mexico, marking the company's latest expansion from Canada, Costa Rica, and parts of Europe. Merchants can accept Bitcoin and instantly convert pesos on demand, making this way more useful than a QR code taped to a coconut on the beach in Tulum. Now, Francis Pouliot, the CEO and professional sound money evangelist, said the move is all about turbocharging Mexico's growing Bitcoin circular economy. We hope this will massively boost the emerging Bitcoin circular economies in Mexico, Pouliot noted, which is French-Canadian for let's orange pill the whole damn country. A really bad French-Canadian impression. Now, the platform now lets Mexican users buy Bitcoin directly into self-custody wallets using their local bank accounts. No exchanges holding your keys here, no sketchy altcoin detours, just good old BTC routed through some old lightning-powered magic. Oh, and if you forgot, or if you've got questions, you won't be arguing with an AI chatbot named Santiago GPT. There's real Spanish-speaking humans offering privacy-focused support in-app. The service is particularly useful in Mexico's remittance-heavy economy, where families lose billions of dollars in fees every year. Now, thanks to Bitcoin's borderless nature and Bull's infrastructure, Aunt Maria can send funds from Toronto to Tijuana without Western Union stealing half of it. And this isn't just big for gig workers and side hustlers. Bull Bitcoin has also geared up for merchants and SMBs, providing tools to integrate Bitcoin payments with minimal friction. So whether you're running a tamale stand or an eco-resort in Oaxaca, you now have access to robust payment networks backed by battle-tested infrastructure. Now, what's even better than this is that Bull is registered with Mexico's Tax Administration Service under sensitive activities, which means they're playing by the rules when it comes to anti-money laundering and virtual asset regs. That's right. An actual Bitcoin company that believes in KYC, AML, and maybe don't get it indicted. Unlike speculative casinos slinging Pepe derivatives and yield-farmed vapor, Bull Bitcoin is laser-focused on Bitcoin's real-world utility, especially as a hedge against inflation and a tool for wealth protection in an increasingly fragile financial system. They're also promoting The Mission, a grassroots push to support local Bitcoin meetups and community education. Because nothing screams monetary revolution like a room full of people yelling, "Not your keys, not your cheese," over a horchata. Bottom line here, Bull Bitcoin's Mexico launch is a big flex. It's an investment in real Bitcoin adoption, not hype, not hopium, but actual infrastructure that empowers people to take control of their money in a country that could seriously benefit from financial sovereignty. It's game time, and the U.S. Speaker of the House has decided to give us their 2 cents, saying that young men aren't working today because they have Medicaid and are too busy playing Call of Duty. Again, that is according to U.S. Speaker of the House Mike Johnson. This is part of a push from Republicans to add work requirements to Medicaid, you know, the healthcare program for low-income Americans. Johnson says that if we make these guys work, they'll save money and return the dignity of work. Because nothing says dignity like getting a job to afford Advil. The problem with this argument is the reality of it all. According to healthcare researchers at the KFF, that most Medicaid recipients do work. 64% under age 65 are employed full or part-time. Those who aren't, well, they're in school, or they're caregivers, or they're disabled. And yes, even with a controller in their hand, they still do exist. The idea that healthcare makes people lazy is a classic trope. But if that were true, China, which has universal healthcare, should be a nation of couch potatoes. Instead, they're outpacing us economically. And yes, Robert F. Kennedy Jr. recently confused Medicaid and Medicare, and Linda McMahon called AI A1. So things aren't exactly thriving on the policy side either. But cutting healthcare because you saw a teenager teabag someone in Fortnite is not the move here. You want young men to stop playing games all day? Well, maybe give them better jobs than professional scapegoat. Taking a quick break. Bullish or bearish coming up. All right, it's time for some bullish, bearish, or BS. This is where we go over the top stories of the day and decide if things are looking good, they're looking bad, they're looking like a bunch of bull. All right, first up, we have $93,000 Bitcoin. It hit 93K recently. It hit as high as 94.5. Its highest in the last 6 weeks after Trump said tariffs on China might be coming down. Treasury officials hinted at calming markets, and Michael Saylor reminded everyone that Bitcoin thrives on chaos. I'm feeling bullish on this. I mean, when Bitcoin decouples from stocks, dominates altcoins, and has ETF inflows flying all over the place, that's not noise, gang. That's bullish confirmation with rocket fuel. I'm bullish on that one. I mean, resistance still exists, but the vibe is full send. Bullish to start. I like it. Next up, we have Paul Adkins as the new SEC chair. He's replacing Gary Gensler, the man whose crypto policies were one big regulatory wet blanket. Nobody liked that guy. Adkins has crypto street cred. He favors innovation and isn't here to carpet bomb the industry with subpoenas. I mean, this is really bullish, guys. I mean, this is like replacing your high school principal with someone who actually understands why you were late and also owns Bitcoin. Adkins isn't perfect, but he's a huge upgrade over Gensler. I mean, Adkins is giving us some crypto regulatory hope, which is definitely bullish in both the short and the long term. Too bullish, no bearish to start. Things are looking good. Next up, we have California's assembly just moved a bill forward that protects your right to self-custody crypto and prohibits public entities from messing with your digital assets or slapping on random taxes. Whoa, we're getting hot today. That's bullish too. I mean, legal clarity for Bitcoin in California. Hey, that's the 4th largest economy in the world, don't you know? I mean, that's not just bullish, that's a beachside bull run. If the bill passes, California could lead the U.S. crypto policy race. Let's hope so. I mean, California supporting crypto rights? Guys, super bullish. 3 bullish, 0 bearish, no BS. This is an awesome start. Next up on some lighter news, we got former basketball legend Scottie Pippen dropped a 2-word tweet just saying, study Bitcoin. He also predicts the biggest altcoin bull run will start back on April 20th based on halving math. I mean, this is either brilliant or straight up meme fuel. I love you, Scottie. I do. I'm a Chicago guy, but This is BS. Unless your investment thesis has more depth than a tweet, I'm going to have to call BS on this one. I love the vibes, though. I love the vibes, but we're going to stick with the charts. You stick with the dunks, Scottie. This is just a BS call, but at least it's an entertaining BS call. So we're at 3 bull, 1 BS, 0 bear. Finally, we have hackers are using Zoom's remote control feature to steal crypto by tricking users into giving them full access mid-interview. They're impersonating Bloomberg reporters and scheduling fake Calendly invites. I mean, listen, guys, there's always going to be new hacks out there, and anytime a hacker can jack your wallet through a Zoom call or something else, that's a huge red flag for user safety, and it's not the best optics for Web3 security. So be paranoid, be skeptical, and you're never really going to be paranoid enough. So, keep your wits about you out there. Hackers stealing crypto via Zoom, that unfortunately is bearish. But today's score, we have 3 bullish, 1 bearish, and 1 BS. So today, we're flexing bullish here, guys. Regulators are chilling. California is waking up, and even Scottie Pippen's out here trying to pump our bags. So ignore the haters, the hackers, and the losers. Just enjoy the ride while we're on it. That is it for today's episode of the Blockchain Report. As always, thanks for tuning in. And don't forget to follow, like, and subscribe to RoxomTV and me at Hank at RoxomTV on all platforms in the world. And I will see you DGens tomorrow for more Blockchain Report. Thanks for tuning in. See you mañana.